Hey there traders, and welcome back for episode number 136 from the StockBandit.tv. I'm sure glad you joined me for this episode. And on Sundays, we always take a look at the major averages and eyeball kind of some key zones for the indices. We want to be aware of the major market action and know that that's going to influence how individual stocks move. So, by the way, happy Father's Day to those of you who are dads out there. Hope you've had a wonderful weekend. So, as we head into a brand new week of trading, let's start off with the NASDAQ here before we get to the other indices. This index has just seen a very big rally off this support zone. We've got kind of a double bottom in place here, and we've now rallied up through the peak between those two lows. So this has been a confirmed double bottom at this point. And last week we saw a test of the upper end of this trading range, which is marked by this yellow line. That's at 2282. That occurred on Monday, and then we saw kind of a weak finish there in finishing at the lows of the day. So it looked like this range was going to be respected for a little bit longer. However, on Tuesday we saw a big breakout day, and then that was just followed by some very quiet basing action in the next few sessions. So Tuesday, Wednesday, Thursday, Friday, we finished at about the same level each day for this index and some of the others as well. But we're holding nicely above this 2282 level in yellow. We've run a considerable distance, rallying some 8.5% from the low here set in June to the high set on Friday. So that's a very big rally without a pullback. And at this point, if we did pull back, even back into this range, that certainly would not be a bad thing at all. It would, in fact, offer this index the potential to create a higher low somewhere in here. Who knows where that pullback might be or if we'll even get it just yet. But for now, this index is resting after a considerable rally, and that's a very good thing to see. We do have an unfilled gap up here from several weeks back. It really begins about the 2375 level. So if the buyers get back in gear and take us out of this 4-day kind of range that we've been in here and get back on the move, this index really has room to run back up toward that gap at 2375. So that's the upside level to keep an eye on. If we do happen to roll over from here, just be cautious on the long side. It's a time to be watching to see how that next pullback gets treated, because again, it will hold potential to create a higher low after this double bottom that we've just seen. For the S&P 500, this index was really respecting this trading range very well, including on Monday of last week, rallying right up toward this 1105 area and turning away from it. But then on Tuesday, we saw a nice solid breakout and then some additional basing action Wednesday, Thursday, Friday. So here again, we have broken out. 1105 is now serving as some support, and we're not giving back any ground just yet. This index has rallied about 7.5% off the low to the high, so that's a big move here as well without a pullback. It has more room to run higher if the buyers get back in gear, but once again, if we do happen to pull back here, there's going to be the potential for a higher low at some point compared to this support zone down here at the 1040 area. For the Russell, this is the small cap index, and it's really dealing with this 670 area. This has been a zone that's really been struggling with. It's not been able to clear it for more than just very short times, and has not been able to close above that as well. So if we see the Russell move up through 670, it could easily get back in gear and run higher. For now, it's really respecting that zone. So I'm on the watch for a possible pullback that may create the first higher low we've seen in a while. And the Dow is holding nicely above this 10,260 zone that it broke out through last week. It does have room to run higher, but it's moved a considerable distance here as well. A pullback could easily create a higher low for this index after finding some support down here at this 97.57 area, I think is the low. 97.57, 97.75 are these two areas right here. So we could easily pull back and create a higher low. That's what I'm watching here. And finally, the VIX. This is the fear index, topping out at about 37.5 just recently. It's been really a one-way decline since then, and no bounce. If we do see the market happen to pull back, I would expect to see the VIX turn back up here, and the next logical spot would be right around here, this 29.50 to 30 area. That's been recent support that was broken it could get tested if we do happen to see the market begin to pull back and fear may begin to kind of turn a little bit higher. But for now, fear continues to subside, and that means that there's a little bit of growing confidence in stocks. Thanks for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.